this morning's setup right here. So we have that low taking out the sell side with this stab below it. So right away, whenever I'm looking for a stop run, and I have a bias that's bullish or bearish in this case, told you we've been looking for higher prices as long as that daily yellow fair value gap doesn't have a close below it. My interpretation is the market's going to want to go higher. It's going to reach for discount to premium runs. Like it drops down to a discount to a PD array that is bullish to run to a higher time frame premium array. Okay, so that's why I gave you the higher time frame daily. That's up here. See, that's it. Fair value gap. I told you I want to see it. Try to trade to and turn into an inversion fair value gap. But right now, this is where we're at this morning. 9:30 opening. First percent of fair value gap is in here on the 1 minute chart. But this run below that low here is going to be our catalyst for Venom. Do we have a single candle run below the sell side liquidity pool? Yes. Do we have a candle that leaves that low and goes back higher on one singular pass higher? So we have a sell off, at least one minimum number of candles, at least one below, and then leaving it. Well, we have 1, 2, and then here we have the big buy side of sell side efficiency. So we have SIBI, inject the Venom, run away from it. So here's the two fangs. Okay, that's the play on words I call for my Venom account or Venom PD array and setup. The criteria is we're going to be a buyer, but we have to be a buyer at the opening price here on that fang or less. Okay, and there's that. So we have to be a buyer at that price or less. Look how much time it's spent in distortion. That's what this is, time distortion. 17 candlesticks over an hour just sitting in there, just banging around, not doing much of anything with these small little ranges here. But the range high from here to here, you can clearly see there's an equilibrium price point that it worked off of. So yeah, it's just hovering around that. So that price is just the consolidation of all this garbage type price action, which is meant to wear you out. Traders are not going to see this as an obvious long. They're not going to see this as an obvious short because it stays here and it frustrates them. So what you have to do is you have to submit to something and stick to it. So this candlestick's low is risk, and this candlestick or less is an entry for this Venom model. Okay, so here's that sell side. Runs below, leaves it. Now, if I was going to use the 1 minute chart, I would have the benefit of looking for an opening of a new long position at that closing price or less, which would have been offered to me here. May have missed it on here. Let's just be fair. It may not have given it to me here, but I had several opportunities here, here, and then it starts running away at the lunch hour, noon. Okay. So this is what wears traders out. And whenever you see price going sideways, you're going to have to toggle up. Okay, go up a time frame or two. So my time frames are obviously 1 minute, and then jumps to a 5, then a 15, and an hourly. But if there's a whole lot of candles on the 15, I might go to the 30-minute first before going into the hourly and see if there's any refinement between the levels and PD arrays seen between 60 minutes and 30 minutes. But generally, that's the hierarchy of where I go to before I get to a 4-hour then daily chart. But this kind of stuff wears people out. Okay, and you're just going to have to bite the bullet and say, okay, I'm willing to assume the trade and get in at the price that makes sense. I saw the setup. The Venom model is on the 5-minute chart. So that's the reason why I framed it with the 5-minute candlestick for liquidity purposes. Running my stop down below the candlestick that pierces back above the low at target. So again, same thing. Drops down, injects the Venom into sell stops here, accumulates those sell stops, and then breaks higher. You have to have a SIBI first and then a BISI leaving it, or it's not a Venom. You got to enter below the second candle closing price, or it's not a Venom. Okay, and ultimately the price starts to run up, as I mentioned. Beautiful delivery to the first presented fair value gap of this morning, and it's Monday, so it's the first presented fair value gap of the week. So you want to make sure you denote your first one of the week like this. That kind of stands out no matter what. And then it runs up in, there's the exit right there. So just a really nice little wait and see. Wait until it gets down to a discount range. Wait for the sell off when you're bullish. Look for your entry models. And if you were not going to use the Venom type model in here, you could have used a inversion fair value gap right here. You defer your entry until a time that the market's proven to you that it has turned around. I'm picking up a little bit. All right, so here we had this consolidation. Wait for it to leave the consolidation, prove it's moving higher. That's displacement here, trading above this high. We're not a breakout trader. It just tells us it's done the damage down here. Now we're seeing the market go back above old areas of where people would trust that as resistance. Trades above it, comes back down, lower quadrant of this, which is drawn incorrectly. It doesn't look like it, but it's on there, right? Okay. All right, so we can see that the market eventually trades above it, comes back down in lower quadrant. Look at the bodies. See what this is doing right here? The bodies are telling you the narrative now. We traded in the upper half. Any wicks are just allowing the market to take individuals that trail stop losses up. They're allowed to do the damage. So the bodies are telling you, okay, we're not staying down there. So it leaves, comes back down in, then this should be what? Not willing to go back down the lower half. Okay, that's the theory behind institutional order flow and my PD arrays. Okay, not someone obviously away from the lower half, and the market rallies up. Now you can do several things in here. You can use the volume imbalance in here as an entry there, and then or this was your catalyst saying, okay, we are now turning higher, so now we can attack these relative equal highs over here into the PM session. Use the first percent fair value entry, which is simply just getting in, trusting that the information that I've outlined thus far as it relates to the Venom model would stand true. And you can see it tested out. You go in here on YouTube channel and look up Venom example, and you'll see me explain what I just showed you here. It's just another form of using a deferred entry on a turtle soup long or a turtle soup short. You don't have to be in there where the actual stop hunt is occurring. Wait for the market to give it to you with the Venom model. And then it's like taking candy from a baby. 30 to 2 o'clock. Right there. That's your range. You want to look through and find your first percent of fair value gap. And then extend that forward into here. And you'll see something that will be beneficial for your journaling. I'm not showing you everything. Otherwise, there's no point for you to go into your charts. Between 1:30 and 2 o'clock Eastern time, first percent of fair value gap, extend it forward, and you'll have another opportunity to study for the PM session, short or long. Okay, and that's going to be it for today. Lord willing, I'll wrap with you on X tomorrow. No promises in terms of trading. I'm actually having a pretty bad bout of my back going off. So depending upon what the Lord allows for, I will talk with you tomorrow. Until then, be safe.